Hello, and welcome to your After Hours Market Dive with Justin and Deep Dive Stocks for Tuesday, September 23rd. And today we're going to be looking at NVIDIA, GME, Bitcoin, and Amazon. Some pretty exciting moves in the market today. It looks like some of the weakness that's kind of been peeking its head up in terms of the liquidity metrics, maybe really starting to poke through. But let's not get ahead of ourselves. Let's check out the data and see what they say. Last message though before we get started, remember, I might not always be around to do these videos every day. So if you don't want to miss out on important liquidity moves, I definitely recommend checking out deepdivestocks.com/membership to get your LDPM, LDPS, liquidity scanner, and liquidity levels all to yourself. You can use them when you want, how you want, where you want, and why you want. You don't have to wait for me to make these videos. So let's go ahead and get started. First up, we have NVIDIA down 2.82% today. Looking at the daily here, we see that bearish liquidity is continuing. We've actually had bearish liquidity for a while, starting about, what's the 8th month? August 12th. And since then, we're not down much, but we see we've had a max drawdown now of 10%. We've recovered a little bit, and we're now sitting about 2% down. During this recovery, though, what's important to note is that the liquidity hasn't switched back to bullish. In fact, we can see that there was like this really nice bearish, we had this bullish run, and then as soon as things started getting the bearish liquidity, price really started to kind of go wild, right? And that's, the benefit of LDPS. Oh yeah, I don't have LDPM up here. I was testing out using just LDPS in terms of like sharing the content and stuff. But when we add LDPM on 15 minutes, we see that we had this nice aggressive bid cascade that walked in yesterday. We had that nice classic, super classic behavior. We did get bearish liquidity as the LDPM 5 and spot started to meet. So that seems like a good place to check things out. So yeah, we had that aggressive bid cascade. We had the bearish liquidity. Test LDPM 5, breaks through, looks like almost immediately on market open, we get to LDPM L6, we fall through that, and test LDPM L7, and now looks like we're doing a little mini bounce. There does seem to be some evidence of another aggressive bid cascade that tried to walk in, but we see that it really didn't do much for a spot. It seems to have just been absorbed in that downward pressure. So we see that LDPS is telling us there's an aggressive ask. We are flowing a little bit to the ask, and that's probably the organic slash, those slightly eager bids moving up to scoop up the bid, or to get the dip, to buy the dip. And so we're pushing back a little bit on that aggressive ask, but the predominant player in the market right now for NVIDIA, as measured on the 15-minute, is definitely this aggressive ask. This is still technically a bear trap, so we should expect recovery. But it's going to be important to note how this response is handled with using LDPM L7 as support. So overall, this is still a pretty bearish display for the data. And then when we move back on the daily, we see that indeed we have that bearish liquidity, testing LDPM L5 support here. Let's zoom in just a tad. And so overall on NVIDIA, this definitely seems quite bearish. Is that the same for GME? Not quite. We see that the process is processing. We're part of this bullish liquidity, and we expect movement still to LDPM L6 up here at $29. And it doesn't seem like there is anything in the way on the daily to interrupt that. If we move into the 15-minute, we see yesterday we also had that bit of an aggressive bid cascade. We had this. The response was this profit taking came in, bearish liquidity. And but again, unfortunately, on the 15-minute, it doesn't look, it's not the most promising of findings. So we get this aggressive bid cascade walk in, we get a little bit of the price stagnation, bearish liquidity enters, so we fall through the supports, or we did, but we recovered. And it looks like that's basically where we're at. Yeah, I didn't see anything. So this is just, it looks like spot with on the 15-minute, we had that a little bit of a bearish, we have this eager ask, and it looks like, let me make sure. Yep. So it looks like we've had this bearish liquidity come in after this profit taking, and the supports have been supporting, but so far no return of bullish, like a distinct bullish player. So it looks like the value seekers here, the bid, are just sort of passively absorbing this eager ask. And, you know, we haven't really gotten a good bullish response yet. So on the new term, still slightly a little nerve-wracking for the bulls on GME, but we can see on the daily, there really isn't any signs of resistance for the daily moves, which is, you know, those out like on the daily, we're talking weeks to months out in the future. And we still have about 11% up before we interact with that LDPM L6 resistance up there at 29.43. So moving right along to the daily, last time we checked in on the daily, we were quite bearish, and it seems like things haven't actually changed for Bitcoin. We've gone from like this nice soft pink bearish to a little bit more robust bearish print. And so things are slightly more bearish than they were. We've definitely fallen through this LDPM L7 support. And this is technically a bear trap, right? So because we have 5 over 6 over 7, but LDPS is bearish. And normally in these moments, we would be looking for those dip buyers, those like LDPMs 1, 2, 3, 4. LDPM 3, though, however, is up here in the ask. So those are more profit taking. And even LDPM, LDPM L4 here doesn't look like it's scooping under price. So whereas in these bear trap situations, one of the things we look for is that those dip buyers start coming in and sort of rapidly absorb that ask, and then liquidity jumps right back up. Here we don't see that. So this is just a particularly bearish print for Bitcoin on the daily. And if we check out the 15-minute to see how the next, like, until tomorrow open or even into tomorrow is, we see, let's take a look at how things have gone. So we have a bearish LDPM stack, 765. So we have this bull trap here. Looks like a little bearish liquidity pokes through, struggling to get above L7. Bearish liquidity returns, so the bear trap is basically over. We expect downside, and that's where we are. So the current environment that we find Bitcoin in is one that can be described as a recently failed bull trap that has returned to bearish liquidity. We do see LDPM L3 here kind of moving down to spot. It'll be, you know, we kind of have to wait to see if it hangs out above spot, in which case it just means that profit takers are still kind of, you know, they're profit taking as spot moves down. Or if we see LDPM L3 move under spot, then we can be more certain that those are dip buying activities. But since these were asks before, and it doesn't look like they're too eager in moving below spot, the assumption is that the leaning is more towards that these are actually just still profit taking as spot declines. So Bitcoin is particularly bearish on both the daily and the 15-minute. So it seems like in the market there's, you know, I don't mean to be ringing the alarm bells, but there's a lot of this situation where we've had this sort of protracted period of bearish liquidity despite an appreciating spot, which, you know, if for those of you who may be new to LDPM and LDPS, that might seem strange, but to some of us who have been using this for a little bit longer, it never ends well. So LDPS is the benefit of LDPS is that it is price change agnostic. It is strictly looking at who is transacting, when they're transacting, and sort of the force that they're transacting with. And so when you get even price appreciation, but you get this pattern, what I'm talking about. And this is something that we see throughout the market. Right, so if we go back to NVIDIA, because we haven't looked at Amazon just yet, so if we get rid of the replay feature, like let's look at, I mean, you pick a stock and you're going to find this, so we can just even go to SPX. Here's the bearish poke through. We can do, I bet INTC even, I'm just really pulling, INTC doesn't. What are some other big stocks? Oracle. All right, I'm back. Sorry, I paused it for a second. But here, Oracle, we actually see right before the big price appreciation, same period of time, this bearish liquidity. So it's just kind of this pattern that you see throughout the whole market. And whenever there's an odd LDPS showing on maybe on a specific entity, then you want to watch it, right? You want to go like, okay, what's going on here? But when you start seeing that same pattern over and over again on across the market and concentrated in particular stocks, it starts raising eyebrows for, this LDPS is detecting that this environment is strictly not conducive for sustained bullish behavior. And that's why it paints the candles red, because the environment looks more like it's designed to sustain bearish performance. And, if you delay that bearish performance long enough, you tend to get like rapid corrections. On the 1 minute on Bitcoin, just real quick during my rant, we see a little bit of a mixed stack with bullish liquidity trying to break through LDPM L7. We wish it the best. Moving along to Amazon on the daily, if we add LDPM, we see today's bearish liquidity brought spot directly to LDPM L6 at 220. And again, this is the same actually situation that we had back in the start of last month, where the bearish liquidity spontaneously brought things down to LDPM L6 once more. Last time there was this nice bounce. This time we see that there is absolute profit taking going on with this bearish liquidity, and LDPM L5 has even joined above LDPM L6 along with LDPM L7. So this is a particularly bearish print as well. If we move to the 15-minute, we see more bearishness. I don't know if there's a theme going on, but there is. We see that we had bearish liquidity that started about Friday, landed us into Monday. Let's take a peek at what happened after Monday. We do see this aggressive ask cascade if you peeked it over there in the corner. So we had that bearish liquidity. We see, so this is what I was talking about with, I forget what it was, unfortunately, but here LDPM L3 scoops under, so now we're dip buying versus this period of time is profit taking. We get a little bit of that dip buying bullish liquidity, but it looks like right as the market opened, we get this massive aggressive ask cascade that pushed spot down. And so this is actually a bull trap. I didn't even notice that. So 765. And then, so we get this massive correction, and now we're just bearish liquidity inside of a bearish LDPM stack with a little bit of dip buying, it seems, helping to support spot from crashing even more than it already did today, which is 3%. Now, the longevity of this dip buying is, obviously going to be the question du jour. So keeping track of this is going to be important. Unfortunately, right now, the expectation isn't that spot will reach LDPM L5 even, because LDPS is bearish. So we actually expect LDPM L3 to fail and spot to move back down. And so that is all for today. There's definitely, I think, there's been crazy price appreciation lately, but and some of the data I think have been, forced into appearing bullish. But a lot of the data has been just consistently for the past month or so, especially been printing bearish prints, even though spot has been rising. And I think that these types of behaviors, this volatility, this sort of in my head, I kind of see it as like a return to what should be, is underway. And so there is some concern for that. One of the cool things we can do actually is what I just learned is we can do, like I didn't really ever think of this before until someone mentioned that on I guess it's pretty common, but on these trading data platforms, you can actually directly compare two symbols. So if we put SPX over VIX, so SPX is on top, VIX is on the bottom, we get this image. This image on the 15-minute is bearish. So this means that this ratio is going to decrease. Well, how can SPX over VIX decrease? If volatility rises and if SPX falls. And that is what we see here. And so on the 15-minute, the expectation for the future in the next days or two is that the volatility is going to rise more than SPX rises. And so that's telling us that there is a significantly high chance of a volatility spike. On the daily, though, we still see overall, it looks like the SPX is destined to outperform. But also, look, even in these data, when we do this combination, we see that bearish liquidity that we kind of see throughout everywhere. And so on the daily, it looks like we're still holding somewhat strong, but on the 15-minute, this absolutely looks like a situation of anticipated vol spiking. So pretty cool. So being able to combine these things, I think another one I was looking at was Tesla over RIVN to see, the relative, how the players are expected to, how the two are expected to perform relative to one another. And to that, we see it was bullish, but now bearish, at least on the daily, right? So RIVN is expected to outperform Tesla for this print. It's a new print, but aggressive ask. So yeah, so just kind of comparing two symbols like this is actually pretty exciting. I think if you look at the data here, if we add, sorry, this is getting a little off topic, but if we add Tesla, and then if we add RIVN, we can see when things were bullish here, the Tesla rose quite substantially, 104%, while RIVN only rose 12%. And so that's what these bullish bearish data mean when we compare the two. Bullish means that the top number is going to perform greater than the bottom symbol, and bearish means that the bottom symbol is going to outperform the top symbol. Pretty cool. And you can't really do this with any other metrics. Like, this is a really cool way to compare to equities that isn't just looking at nominal TA or price action, like a true liquidity look. How is the liquidity flowing between these two stocks? And then let's directly compare them. So I think it's pretty cool. So that is all I have for you guys today. Apologies for the frequent pausing, just some loud automobiles nearby. And so, all right, that's all I have for you guys. Definitely, I still recommend checking out LDPM, LDPS, liquidity levels, and liquidity scanner for yourself. I highly recommend. I'm going to be changing out the link on the website to include a trial if you want. So when you go to checkout, you can click trial. Just remember to email me your TradingView and username. The email will pop up in your thank you for subscribing message, and send me your TradingView username. I'll get you set up, and you get to use these tools for yourself, see if you like them. And if you like them, you can go ahead and get them for yourself forever. That'll be exciting. So, okay, guys, that's all I have for you guys. Thank you for joining today, the Deep Dive After Hours Market Dive, and I will see you guys next time. Adios.